Hello and welcome to Trading 5 Talents. The topic of this video is going to be covering the events that move the stock market. Now, I've talked about binary events and major volatility in the stock market previously when I was going over some of my iron condor trading strategies. And I've had a few people ask me what these events were, how to find them. Obviously, we know why to avoid them. So I want to make a video just covering what these types of events are. So let's first start by talking about black swan events or black swans. Now, this is an event that is difficult to predict when it's going to happen, but when it does happen, it's got a major impact either on society or, in our case, the financial markets. These events are very rare, and again, they are difficult to predict when they would happen. This theory of black swan events was developed by Nassim Nicholas Taleb in his book called The Black Swan, where he introduces the concept, and you see it. Once you know what these are referred to, you're going to see it all the time in the stock market, when they do happen. So here is a daily chart of the SPY starting in January of 2022 all the way up until, we're in middle of December right now. So this is a one-year chart. The SPY is an ETF that tracks the S&P 500. So this is a pretty good indicator of what's going on in the stock market. So where are these black swan events in this chart? So one of them is right here. This is when the news broke that Russia invaded Ukraine. And you can see that that drop, the major gap down from where we closed at this day and then where we opened up this following day once the news broke. And then there was a rally to sort of close that gap and then it continued upward. But that was a new low for the year, and that coincided with this black swan. We couldn't have predicted when this was going to happen. Maybe we knew that it might happen, but a black swan is very difficult to predict when it actually would happen. Another black swan event occurred right here, and you can see this coincides with the next low of the stock market. And this is when the cryptocurrency Luna coin, this is when it crashed, and it created a whole bunch of turmoil in the crypto market. And you can see it, obviously it happened during this day, or at least that's when the news broke. And there was a lot of volatility during this period. So those are the two major black swans, at least that I'm aware of, that happened in 2022. Yes, there are other major events that happened, but a lot of those were already scheduled to happen. So that, begs the question of, when you look at this chart, you see all of these different types of moves. So what about all of these moves? When or what actually occurred during these times to make the market so volatile? So if you look at some of these, you can see a big decline right here. You can see a lot of choppy action and then moving back up. You can see a lot of gaps here. You can see a large move up here. Again, big red candles down here, a lot of gaps, major gaps, and all of these are gaps. And it looks like the stock market is just sort of, skidding and it just takes these huge leaps downward. You can see this one right here. You can see this one here that we're just experiencing right now in mid-December. You can see this huge green candle. I mean, there's just a lot of volatility. So if those aren't the black swan events, what are these events that are causing this glitch in the markets this year? So this is what is referred to as a binary event. And this is another major event that occurs in the market, but this has a specified date of occurrence. That is, we know when it's going to happen, but what we don't know is what the outcome is going to be. It could either make the market move up or it could make the market move down in a dramatic fashion. And so that's the binary nature of this event. In 2022, most of these binary events are related to the actions of our central banking system here in the US, the Federal Reserve System. And this is simply just referred to as the Fed, and that's how I'll probably refer to it as well. Currently, Jerome Powell is the chairman of the Fed, so his name is going to come up quite a bit when we're talking about these types of binary events. So this is our current economic environment in my simplistic view. So I'm not an economist. I'm not a financial advisor. This is just how I'm viewing our current economic state. And if you have more insight, if I'm missing something or misspoke, please let me know down in the comments. So right here is a chart showing inflation here in the US. Again, this is for calendar year 2022. So you can see we started at 7 on the left-hand side. And we slowly went up. We peaked in June, and now we're coming back down as of November. But inflation is still high here in the US, and I know other parts of the globe. Now, the Fed tries to control inflation by using 3 monetary policy tools. The first is controlling interest rates. And we hear a lot about this in the news. Interest rates are going up. When we were in the bull market, interest rates were going down. The second thing that they can do is they adjust the money supply. So things like quantitative tightening or quantitative easing, whether they're allowing money to flow into the market or taking it out of the market. And then the third is just using the open market to actually buy or sell assets in the open market. So these 3 tools, these 3 basic tools are what the Fed is using to control inflation. Because inflation is high, they're going to try to bring it down. Now, the way they're going to do that is they want to lower the money supply. So that will ideally and hopefully make consumers, Main Street, spend less, decreasing demand. Because right now, products are they cost a lot of money. They're expensive. You go to the store, you see prices have gone up. So what the Fed wants to do is they want to lower those producer prices. But to do that, what they want to do is lower also the money supply and making it more expensive to borrow money so that they hope that consumers, the purchasers, are actually going to be buying less product. And when we buy less product, the producers ideally will lower their prices to retain the customers. So there's going to be less demand, and now the producers are going to lower their product prices in hopes to have more purchases. Therefore, the overall goal is met. That is lower inflation or lower product prices across the board. So that's the narrative as I see it here in 2022 in the US. And we can see if we compare the inflation to this chart right here, the chart on the bottom is showing the interest rates over time, again, for the calendar year of 2022. So as you go from left to right, we had low interest rates, and then the Fed continually has been raising these interest rates at these set points right here. So as the interest rates go up, consumer spending hopefully is going down, and hopefully the producer prices are following and going down, thereby lowering inflation. So we can see this negative correlation right here. As the interest rates go up, we can see inflation here in this top chart go down. So that's what the Fed is trying to do. Okay, now that's the background of this video. So what is going to move the market? And there are 5 big things, at least as I see them, that's going to move the market. And they're all related to inflation. So these events are going to move the US financial markets. Number 1, core inflation reports. Now, obviously, as the name implies, it's going to be denoting what the current inflation rate is. So when it's released, let's say in December, it's releasing the information from November. So it's a lagging indicator. But obviously, that's going to let everyone know how the monetary policy by the Fed is performing. The second thing is CPI reports. Now, CPI is Consumer Price Index. And again, this is, the prices that are paid by the consumer for different products. And again, that is a measure of inflation that the Fed looks at. The third thing are interest rate decisions. Now remember, the Fed wants to raise interest rates so that it makes it more expensive for people to borrow money. And if it makes it more expensive for people to borrow money, they're less likely to spend money because higher interest rates for an auto loan, for a mortgage, etc. So the less they spend, there's less demand, hoping to move the producers to lower their prices and thereby lower the average price of products, that is, lower inflation. So interest rate decisions are going to be very important. And all of 2022, they've just been going up. The fourth thing that can move the market are the FOMC minutes. Now, this is the Federal Open Market Committee. Now, remember, for the three policy tools that the Fed can use to control inflation, one of those was the open market, and that is the buying and selling of assets in the open market. That is going to be determined and controlled by this particular committee. So what this committee does, the FOMC, is going to help the Fed, ideally, lower inflation. So this is a inflation-related piece of information that we need to be aware of as traders. And the fifth thing are the speeches that are given by the Federal Reserve Chairman, Jerome Powell, sometimes just referred to as Jay Powell or the Fed. There are a lot of speakers, a lot of speeches by the Fed throughout the year, but the ones that Jerome Powell makes usually are the ones that move the market the most of the speakers. So if you look out for these five, then you've got a pretty good handle on what's actually moving the markets nowadays. So let's come back to this chart. So remember, we're asking the question, what happened during these events that are shown here with the white arrows? So let's take away the black swans, and we're just going to focus on the white arrows. And we're going to look at the big five here. So first of all, these are the core inflation reports in red. So starting up here at the left, you can see when this inflation report came out, it wasn't good, and you can see the market tanked. The second one came out, it wasn't good, the market tanked. These reports come out every month. I haven't listed every single one of them. I'm just showing on this chart the arrows that had the most dramatic moves. So here was one, and you can see this gap up and all of these gaps right here. So it wasn't a strong move, but it was very volatile during this time. And this big one here in June. Because that's when inflation peaked in this June month. And that's the report that showed it. And you can see these huge gap downs. It's not a stair step down. These are just major drops. Another inflation report, it goes down and then gaps back up. Another one down here. And this was a very volatile time in the market this past October. And then you can see another one right here. We got these gap ups. And then our most recent one showing these moves downward, just like we saw in June. Maybe not as dramatic, but it's very similar to what we saw in June. All right, the second piece of information are the CPI reports. And you can see some of these are exactly coincided with the inflation report. Some of these happen within a day of each other. Sometimes they happen on the same day, but I'll show you how to find those in just a minute. But let's see this one right here. You can see a CPI report. Remember, this is the Consumer Price Index. You can see a gap up. Here, more gap ups. You can see here more gap ups and then a drop down, and the rest of them coincide with the inflation report. Third one are the interest rate decisions. So these are pretty big. While there are forecasts of what the Fed is going to do during these interest rate decisions, sometimes it comes as a surprise. So sometimes the market thinks it's going to be a certain rate that they'll raise the rates by. And if it comes in higher than what they're expecting, it's bad for the market. If it comes in lower than what they're expecting, usually it's good for the market. If it comes in exactly what the market is expecting, sometimes it doesn't really change the market. And a lot of times you'll notice that before these events happen, you start seeing moves in the market because traders are trying to, bake in or take into consideration of what they think the Fed will do on these particular dates, and the market will move accordingly. And when it doesn't meet that expectation, then it drops off and or shoots higher. And so that's why these things are binary, and it operates very similar to what earnings do for individual stocks. So these interest rate decisions, you can see a move upward. Here's another one, a move upward. Right here, just very choppy, a lot of gaps here. A move upward, a move downward. And then here we got a gap up, move downward, and then another move downward. These are interest rate decisions. Fourth are the FOMC minutes. Now, these are minutes of the meeting that this committee already had. And so when that data is released, a lot of traders digest what is being said or what was going on during those committee meetings, and they react accordingly. Again, a lot of volatility in this market, in this area right here. And then after this consolidation, it shoots back up. Right here, it starts this nice trend upward. This one coincided with an interest rate decision. Here we have one, a gap down, and then a strong move downward. And then all of these coincided together. And again, we got four major events occurring on or around the same day, and that really moved the market downward very strongly. And then finally, the Jerome Powell speeches. So this is the Federal Reserve Chairman. When he gives a speech, notice what happens. Down, this one right here, it gaps up and then a strong move downward. These here coincided with other things that were going on, but it just adds sort of fuel to the fire. Sometimes there can be conflicting reports and you'll just have a lot of volatility in the market and it really won't move one way or the other. But again, in my opinion, these are the 5 events to really look out for, even coming into this next year, because inflation isn't completely under control. What a lot of traders are looking for is for the Fed to start lowering the interest rates, and that would probably signal the return of the bull market. But until the Fed stops raising interest rates, we'll probably continue to experience this type of choppy action. So we are down for the year. I don't know exactly what percentage we are down in 2022, but I think more importantly is the volatility that you see here. And you can see all of these arrows indicate that some things really move the market more than others. And right now, the theme for 2022 and probably 2023 is going to be all based around inflation. So when do these big 5 occur? Well, it is easy, thankfully, to find out when these binary events happen. They're not like black swan events, which are unpredictable. We actually know when these events will happen. And if you simply Google economic calendar, you're going to find out when they happen by looking at an economic calendar. I prefer tradingeconomics.com. I'm not affiliated with them in any way. It's just something that I find easy to use, and I'll show it to you in just a second. But what I do is I only look at the US because that's the market that I am most interested in. And then I look for all of these high impact events, which were these 5, the core inflation reports, CPI reports, interest rate decisions, FOMC minutes, and the Jerome Powell speeches. So let's take a look at the Trading Economics economic calendar, and I'll show you what I do with that. Okay, I simply just Google economic calendar, and so Market Watch is one that I used to use. I switched to tradingeconomics.com, so I'll click on that. And under countries, I'm not sure what is the default setting. I think it's just America. And then when you do America, you can see everything that is in North and South America is checked. So I just clear everything and I only click on United States and then click Save. And then you can select by the impact rating. I'm just going to keep it at 1 star for now just to show you. And then you can select the date. So let's take a look at next month. What's also nice is going to the custom so you can see what happened in the past if you're interested in that. But let's just look at next month. And this is what is going on. So Tuesday the 3rd, there are all these things happening, but they don't have a high impact. And the reason I can say that they don't have a high impact is because they're not in this red highlighted font style. So the ones that are in the red highlights, those are the ones that have a high impact. Just because they're in red doesn't necessarily mean they're going to be moving the market in a dramatic fashion. What I'm looking for are those 5. So for example, this one right here, the FOMC minutes released at 2 p.m. These are Eastern Standard Times. So Wednesday, January 4th at 2 p.m., I probably would not want to trade before this or around this time because of the data that's going to be released right here. We can scroll down and we can see, let's see right here, inflation. So this is when the inflation report is coming out. This is pre-market, Thursday, January 12th. Here you have CPI. And you're going to see this at 8:30 as well. So you can see all of these are grouped together right here, pre-market. So pre-market, you're going to expect a very strong move. Now, by the time market opens at 9:30 Eastern time, that move could have already been corrected. I'm not sure, but again, that's just something to keep in mind. Okay, and another one, February 1st on Wednesday at 2 p.m. Here's the interest rate decision. So this is the next one that is going to determine if the Fed is going, or how much the Fed is going to raise the interest rates by. But this is a good calendar. I like it. It's free. So it's just tradingeconomics.com if you want to use it. Otherwise, there's a lot of economic calendars that people use. This is just personal preference. So just to recap, these are the 5 events that I'm looking for: core inflation, CPI, interest rate decisions, FOMC minutes, and Jay Powell speeches. Those are the ones that that I found to move the market the most in 2022, and I don't think that's going to change in 2023. I could be wrong, but if you have any questions about what was covered here in this video, or if you have something to add, maybe something I missed, if I misspoke, again, I'm not an economist, I'm not a financial advisor, so please correct me if I am wrong on any of the stuff down in the comments below. But I hope you enjoyed and found this video helpful and useful. And if you did, please give it a thumbs up and click the subscribe button and turn on the notifications so you can be notified when my next video comes out. Until next time, trade wisely and take care.